A good part of what I'm going to be saying is structural things, monetary things, defining of terms and things of that nature. Because what we're going to be doing is giving you a little bit of experience or information from somebody that's in the insurance business that's dealing with this for presently and has been dealing with this subject for about a year and a half, 2 years now, since we knew it was going to come. Um, but my name is Rick Simerly with Simerly-Ayers Insurance Group. My partner Bob Ayers over there. He and I have been with Blue Cross Blue Shield, now Florida Blue General Agents for since 1989. I was licensed as an agent in 1979, and I'm going to give you just a little bit of history because I think this will help you see what the real problem is. I remember this like it happened just this morning. Niceville, 1980, masonry contractor, had about 7 or 8 employees. He wanted to get health insurance on his employees and his dependents, and we were able to provide for any male and female under age 30 with spouse and an innumerable number of children, $49 a month for a $500 deductible comprehensive plan. That's $49 a month in 1980. Fast forward that all the way up to 2013. Last Monday, I'm sitting there at the internet just looking at things because the beloved exchanges are supposed to start up on Monday, on that Tuesday morning. So I'm looking at what is the average premium for an individual for the silver plan, which is the benchmark plan that's in the exchanges. The average rate was $310 a month for one individual. Now, just looking back at 1980, $49 a month for a full family, $500 deductible. Now $310 a month for one individual. That's the average in the country and nationwide. The problem with this is the inflation. If we had $49 a month insurance for a full family now, we wouldn't be here, and this health care bill wouldn't be existing, and we'd be talking about something else, I suppose, but wouldn't be here. It's the inflationary factor. And so the politicians in their wisdom have decided that what we're going to have is the Affordable Care Bill to try to mitigate this inflationary problem. So I'm going to give you a little bit of insurance talk because I think this will maybe help you see some things. There are 4 ways right now until the end of this year. There's 4 ways you can get health insurance. If your assets are low enough and your income's low enough, or you're old enough, or in the military, the government. The second way is if you have a business or you're employed with a business that has employers group health insurance, then for you, group health insurance. The third way is conversion plans off the group health insurance or the government plans, the HIPAA conversion plans. And the fourth way are underwritten health insurance policies where you go to the agent and insurance company, they ask you questions, you have an exam, and then the underwriters of the insurance company look at you and they determine whether they're going to exclude conditions, rate the premium, or outright decline you, or give you standard rates. If you get standard rates, then you have the lowest rates that you can get anywhere in the United States because underwritten standard health insurance policies are the lowest cost plans because of all the mandates that the state legislatures demand the group insurance put on you. So that's the way it stands right now. Next year, on January 1, the whole thing changes because on January 1 there will be no ability for the insurance companies to have pre-existing conditions on anything. They can't rescind the policies. They can't exclude anything. They have to guarantee the issue. As long as you come in on a timely basis, you're covered under the individual plan. So that's the way it is now. So what has happened then? I'm going to go over since then. I'm going to go over the three items: the individual mandate, the affordable care, the affordable provisions that they have in the bill that's supposed to bring the affordability to certain people, and then the employer, the employer, and the affordable part. Now I'm going to go over a few mundane sections here, and I'll try to. I was going over this with my wife last night, and she looked at me and said, "Rick, you're boring. And I said, Debbie, it's a boring subject. I'm going to do my best. But, so, I'm going to read out to you. And you saw the penalty there for the mandate. Since now all these pre-existing conditions and the health questions are all gone, a flood of people come in, and we're looking at increasing the cost of the insurance. We're already seeing it right now because we're structuring in the new rates for January 1. We'll go over that at the end in a little bit here. But the factor that's supposed to mitigate that is the play or pay rule, which is going to make everybody either play by getting insurance or pay by getting the tax. One of those two. And I'll just go ahead and just talk about what's going to happen this year. That anybody that doesn't, as the lady said, there has this coverage list for 3 months, will have to pay at least for themselves a $95 a year tax. For children, $47.50 a year tax for the children, or $285 for the whole family, or 1%, whichever is higher. Then the next year it goes up. The next year it goes up, and anything after 2016 is subject to cost of living factors. So that's what they're going to do to constrain people to get on the insurance. The exceptions, you saw that somebody was talking about the exception of the Muslims. Now I know there's religious exceptions, but I have not seen anything that specifically excludes Muslims. I haven't seen that, but I've seen what the lady had there, the Indians, the Indian tribes, the incarcerated individuals, undocumented immigrants, and individuals filing under that don't file individual taxes or under the limit of individual or family taxes. Those people are excluded. So that's the individual mandate in a quick nutshell. Next thing I'm going to go to is the employer mandate. The employer mandate is, you've heard that big number, the number 50. I'll get into the number in just a second, but let me say something about employers' group insurance. If you're in the insurance business, you're talking to an employer and you're doing what Bob and I do, there's only two reasons that presently, 98.9% of the time is two reasons that an employer is going to want group health insurance. One, if important individuals in their business or their family are uninsurable and can't get the underwritten policies because they're pre-existing conditions and health problems, that's available for them. They need group health insurance with the employer. Or if the employer has to use the health insurance as a hiring tool. Say they've got a hotshot manager up in Minnesota, and they got to tell that individual on December 1, you come down here with us, your family, your wife, your husband, all your children are going to be covered. No pre-existing conditions, no health questions asked, guaranteed. You've got to have group health insurance to do that as it stands right now until the end of the year. And it's been that way ever since I've been in the business, since 1979. Now it all changes because individuals are treated like unto group insurance, where as long as you come in a timely manner, you're covered, with no pre-existing, no exclusions, nothing. That all costs money. That's going to cost the insurance company. And so the idea is that we're going to put these taxes and penalties on everybody to pull them into the plan. A couple facts about the employer section. You've heard about the fact that any employers with employees less than 50 are not subject to the $2,000 a year penalty to the business that does not have qualified group insurance. And that factor is defined as full-time employees or full-time equivalent employees, and they factor this situation here. They tally up all your employees, and then you tally up all the hours of your part-time employees, and put that all together, divide that by, I believe the number is 120. Why is 120? I don't know. But then after that, you get a number that gives you full-time equivalents. So a company with less than 50 full-time employees could still go breach the mark because that employer also has too many part-time employees with too many hours, thus making him eligible for the tax. We'll get into the questions on this later. Hopefully we'll have a lot of questions, but two things I'm going to mention. Let me get my glasses so I can see my numbers and get them right. I don't know why the politicians came up with this, But to make the group insurance affordable, there has to be a factor where no employee pays more than 9.5% of their family income on the self-employee only premium. Now, where they come up with that number, I don't know, but that's in there. If you're to be affordable coverage, that number cannot be breached by any employee. Additionally, it has to be qualified minimal value coverage that has at least 60% actuarial value. What exactly that means, I'm not quite sure, but it means something to somebody. But the insurance companies are going to have to provide plans. I know Florida Blue is going to do this, as will United Healthcare. They're going to be providing plans that are ACA qualified, and to my knowledge, they're not going to be providing anything that's not ACA qualified. I was hoping they would provide something to compete, but the tax attorneys and all the people at Florida Blue and United Healthcare are all gauged up to make sure when they tell us, here's the plans you can present to the public, they'll be ACA qualified. That's what we were told is going to happen. So that's the employer mandate side. It gets more complicated than that, but I won't go into that detail. The part that makes the thing potentially affordable for some people are the exchanges. And everybody's heard the exchanges, I imagine. The exchange is a website into a system that allows the individuals to go through the same insurance plans that you can get with all the different companies, except when you're with the exchange, you have the potential of getting the subsidy. And you saw the chart up there, the chart that starts with 100% of federal poverty level to 400% of federal poverty level, and then numbers down how many members are in your family. And it's all predicated on members of your family and your income. I have seen that in some situations, if they're structured right, with a bronze plan, and you've probably heard about the bronze plan. That's the lowest cost plan. With some bronze plans, with some structured, some of the subsidies will override the premium, so that you individuals will be able to have no cost of no premium for pretty good coverage, if they're structured correctly. Additionally, there will be subsidies for individuals that are not citizens of the United States but living here legally. There will be subsidies for them. Those individuals, even if they come in under the federal poverty level, there will be subsidies for those also. In Florida, as you remember, we backed out of the rule that the 138 figure. Some states will have 138% of federal poverty level. That'll be their benchline, like Massachusetts and New Jersey and so forth. We opted out of that. So ours starts at 100% of federal poverty level and not 138. That's why you see some of those different numbers if you go to different states. The thing that we're doing in our office and people in our business is we're taking the people when the time comes for the exchanges, when they actually open. They're supposed to open on Tuesday, but they weren't. And they weren't open today. I think that we've got a few more screens that have come up, but nobody in the United States has yet applied for any coverage yet to get a subsidy because they can't. You can't push a button and make things happen. That's not surprising, and I suppose we should expect that. I didn't expect just a total halt, but we have a total halt on anything. We can't do anything. We are seeing some of the plans that you can get outside the exchange, and they are, Bob, would you say 50% higher than what they are before Obamacare? Does that sound right?
Just before Obamacare.
Yeah. We're seeing that we're able to sign people up for Obamacare qualified plans, ACA qualified plans. That will be in existence on January 1. But those will be for people that cannot get or won't go through the exchange. The whole texture of what I've been doing for all these years is changing now, and you just got to deal with it, and that's what we're dealing with here at our office, and then other people in our business are doing the same thing. Anybody have any questions?
So if I understand you correctly, with the brief history of mandates and health insurance, a month for a family to get covered?
Yeah, there was an actual moment when and I remember that. You know, different things you remember in life. I remember that. It was exactly that number.
Okay.
Now, it kept on going up. It's been going ever since. That lasted for a year.
Right, but the pattern that I'm seeing here, correct, I thought I heard you say that state mandates over the 33 years, state mandates caused the rates to go up.
That was a big factor. Not the only, it was a big factor.
Okay, so what is going on is that one definition, it's actually an inaccurate definition of insanity, but everybody calls it that, where they keep doing the same thing and expecting a different result. So the states were like, oh, well, insurance isn't good enough, so we're going to force these mandates and raise the price, and it made things harder. And now the federal government is pushing mandates, and it's supposed to fix things. But somehow the federal government's mandates are magical, and the state's mandates.
You are right. I think you're right.
I just wanted to make sure I understood that correctly. Am I correct?
I think you're correct.
Okay. Just wanted to make sure.
Yes, ma'am.
Why is it that the large employers, like the large restaurant chains that have way more than 50 employees, why are they cutting back to 30 hours? Do you know? I mean,
No, I don't. No, I don't.
don't they have to cover it anyway?
No.
Because they're over 50 employees.
Well, when they're cutting back, they're
50 full-time employees.
Right, but like, I mean, I would think most of the chain restaurants, and they're, you know, they usually don't own just one chain restaurant. They usually own many.
Franchises too. The franchises.
So even if it's just one Olive Garden per se, I mean, I'm guessing they would have more than 50 employees. Is that not?
50 full-time employees or 50 part-time?
I don't know. Either way, there's certainly chains of restaurants where they own multiple locations where they have way more than 50 full-time employee equivalents, and yet they're cutting back. And I don't quite understand.
I don't know either. That's a good question. Yes, sir.
Yes, sir. I brought that question up the other night at the NAACP meeting. And I said, it's so great. Why is Lowe's cutting back on people? You can't find regular people in there anymore. Home Depot, same thing. Can't find them. Olive Garden, you can't find them. All these places, AutoZone, everything. Everybody is part-time. My understanding is if you have people over the 29-hour a week, it costs the company $1.80 a head extra to fund those people under Obamacare, pay for their insurance, etc. So they're cutting back there. It's going to just drive up their cost, and that cost eventually comes out of my wallet, your wallet. Okay? So that's where they're cutting back to get away from that extra cost. And you cannot, very few of these locations around town can you find regular employees. I had most of them trained, they're all gone. I'm a handyman. I go into these Home Depot, Lowe's, and things like that, work with these people on a regular basis. You can't find the regular people anymore. Every day, it's a new body, new body, new body. You got to retrain them.
Yes, ma'am.
Most of those chains are have been granted exemptions. There's 1,400 companies that have been granted exemptions that I'm aware of. But Darden Restaurants, I'm sure was one of them. I remember Jack in the Box was one of them. Wendy's was one of them. So a lot of the places that you think of as restaurants, they've all been granted exemptions, and it's growing really fast. It was about 1,000 exemptions when I first checked. It's 1,400 now the last time I checked. So those places are not being covered under Obamacare. The exemptions are being granted extremely quickly.
And the corporate mandates will push back.
Right, that too. But a lot of the places that were complaining about it, they got exemptions. So that's what's going on.
This is half statement, half question. Maybe you could go ahead and confirm it for me. The penalties and the subsidies are both going to be adjusted for inflation. The penalties after 3 years, like 2017 or something, and those subsidies, I guess that starts right away, though I haven't seen that anywhere. I can't imagine they're going to just do a moratorium for 3 years. Right now on the CPI, healthcare and insurance is officially weighted at 0.65% of the CPI. 0.65%. 0.65%. I just did some back of the Carolyn Ketchel calculations here. The median income in Okaloosa County is $31,000 a year, and the average policy is going to be $310 per person. Now, assuming it's one person, that's roughly $3,720 over $31,000 worth of income, which is about 12% of their income, is going to be directly affected by health care and insurance. And yet in the CPI, it's only 0.65%, which tells me as costs go up, which they will, because the government's spending like a drunken sailor, that you're going to end up with that being lower weighted, and you're not going to get as much back anyway. So over time, you're going to end up in a situation where these subsidies are not going to keep pace either. Am I on the right?
I think you are. I've seen the inflationary factors on those. I haven't memorized the numbers on them, but I think they have, like you're right. They've got a
Yeah, I remember that.
they have an indexing factor.
That's a crime. As soon as I saw that, I said, you know, nobody on earth pays 0.65%. Even if you're, you know, healthy as a horse, you still pay more than 0.65 in a year. But that's the official weighting in the CPI.
Okay.
Rick, I was interested to hear the projection on how much the premium will go up for an individual plan. I think I heard 50% maybe. Is that correct, what I heard for next year?
What I was talking to Bob about, we starting Tuesday, we were able to actually get rates that were for plans that were ACA qualified plans that will not have any pre-X or health questions and all that. So we got that. And we're looking at it. Remember, a 22-year-old male, non-tobacco, lowest premium 190, highest premium I think 280 a month. Right now, on an underwritten basis, Deb, correct me if I'm wrong here, about somewhere around 120 to 150 a month. That's what it would be on an underwritten basis.
And so my question is that we have public employers in the county, the sheriff's department, school system, and so forth, that provide health benefits. And I was just curious, I asked the superintendent of schools, what are they doing in terms of looking at this, in terms of cost increase? And he said that they had hired an Atlanta law firm to try to figure it out. But can we expect that the cost of health insurance for public employees will go up commensurately? And then, of course, the burden there upon the taxpayer will be astronomical.
Yeah, I think you can expect. The numbers I saw just in fees and taxes were 4% for group insurance and 10% next year for individual policies on the fees and taxes alone, not counting the medical trend, inflation, the demographics, all the other things that bring up the rates.
But if that premium cost that I think I heard you say occurs as well, we're looking at a pretty big bill.
Yeah, probably so. Unless you're an individual that falls in the category of in the subsidies, and especially if you're at 300% or down. Once you're over 300% federal poverty level, the subsidy itself is a smaller amount and doesn't sting as much. As you start going down, you get the income, your subsidy gets greater and greater and greater. At 400% is fairly negligible. Yes, sir.
Yeah, and I'll steal some of my wife's thunder because she wrote an article. It was in somebody's newspaper. But actually, Okaloosa County is paying significantly more than the Obamacare rates. Their plan would actually get the Obamacare plans and have to pay that. If they actually change to an Obamacare plan, in that instance, it would cost less. Most individuals are going to end up paying more, but you know, if you have a gold-plated plan and you switch to a more normal plan like the average system has, I don't know what the school system has, but if they're like Okaloosa County, they can actually save money going into
by stepping down the benefit.
by getting the same plan that the citizens have, right? Yeah. But you know, and much like the Congress, you know, some government employees, even rank and file employees end up getting something a whole lot better than the average citizen gets. Now, the question, I was just answering Lamar. The actual question I have is, I'm one of those people that buys an individual policy. My wife and I buy individual policies. Our rate's going to go up over 100%. Now, I've heard that if you like your existing insurance plan, you can keep it. And we have a Florida Blue plan. It's not an ACA compatible plan. That's why our rates are going to go up so much. Now, I've been told I can keep it, but I've asked insurance professionals this question, and I've gotten different answers from them. Some say I can keep my current Florida Blue plan, even though it's not ACA compatible, until the next renewal date. But at that time, I'll have to go into an ACA plan, and it won't be offered after that. I've had some other insurance professional in the state tell me, no, you can keep your existing plan forever, basically. Which one's right?
Here's a date. March 23rd, 2010, the day was the day the law was enacted. If your plan existed before that date,
And it did.
and you did not substantially, substantively change it, have not since then,
Haven't changed it a bit.
you are grandfathered in, and you will not have to change to an ACA qualified plan.
So I can keep that forever.
If you fall in the yeah, not well,
I can fall into that.
yeah.
So I can actually keep my current plan.
Yeah, 3/23, 2010, backward, you had it on that day before then. Zero changes since then. Yeah,
Haven't changed it.
zero change, that's fine.
So let me understand this correctly.
Because
Great that you have-
I was told I could only keep it till my next renewal date, so.
Great.
But I was also.
Well, if you would have changed it in any way, shape, or form, or you've purchased it after that date, you'll be changed in next.
Criteria.
Yes, yeah, I can email you those details too. Yeah, if you want me.
Yeah, I'm just using it as an example. So they have a plan which is grandfathered in that they like, that is different than the criterion, the 5 criteria that they have for
That's
all
right.
plans. They can keep it because it's grandfathered in prior to March 23rd, 2010. But if somebody else came across, myself or somebody, and said, I want their plan, it's actually illegal to sell it to me?
They don't do it. There'll be no companies marking that plan because, like you said, it is illegal. That plan that he has there does not have ACA provisions in it.
It doesn't have maternity coverage for me, okay?
So you have a plan
I
which you'll be able to keep and pay for, but if I want to buy the same thing, it's now going to be illegal. So you can have it, but I can't.
Only because we've had it for so long.
Right, since we've
But
had
yeah.
it since before 2010.
And actually.
Don't get mad down, man.
Welcome to America.
Actually,
But my
the
question
NAACP people
because
get
their
all-
plan- Because their plan is not qualified, do they now have to pay the penalty?
No.
No,
They have higher premiums.
Yeah, well,
no, we have
Not yet.
lower premiums.
for now.
Not yet.
Now, well, let me just state this.
Premiums,
I'm sorry.
what happens to their premiums?
It goes up like everybody else, and an increasing premium, increasing enough, will vaporize any benefits that a grandfather status will give you. They take that thing high enough, you're going to be dropping that plan. It's not. It sounds good. It sounds great, but that increasing premium will change your mind.
At some point, our risk pool will age and it'll shrink, and yeah, we'll have.
Yeah,
For now, at least
it sounds good right now, and for the next year or two, it probably is good, but that's the way it is. Yes, sir.
I just want to dispel some rumors. I'm seeing people post online and whatnot about how they went onto the website, they were actually able to get on, and they put some information in there, their personal information, but they didn't actually sign up. But they were able to investigate what the cost would be, and if they didn't sign up. And some people were saying it was in the thousands for their what do they call it? Their tax. Okay. Is that even possible, or?
To my knowledge, it's not.
Okay.
No.
So obviously they did something wrong.
I think so. Yeah, it sure sounds that way. Yes, sir.
No, you used the term sign up in a timely manner, and thank you for coming out tonight and trying to explain the incomprehensible, by the way. But you used the term in a timely manner, you're gonna get a chance to sign up in a timely manner. What's the magic date on that?
All right.
To define timely manner for me.
The fine timely manner as it stands today is October 1st, the beginning of the open enrollment.
Okay.
Anybody that signs up today will be signed up before 12/15/2013, and they'll be eligible. Their coverage will begin on January 1st, 2014. So we got all this time as open enrollment for these policies. Anybody, as long as you have your paperwork and your funds in order, on 12/15/2013, you will be covered on January 1, 2014. That's the now then for the.
They have to tap your wallet before December, the mid-December, right?
Yeah, there has to be some wallet tapping,
Money in the bank.
and all your paperwork, your electronic stuff in good order.
Pay your taxes by December 15th.
Yeah. Now let me just continue. That open enrollment continues to the end of March,
Oh, okay.
and so but that is anybody. That's the timely manner I'm talking about. That's the way it's supposed to be every year. It's likened unto group insurance with your employer, likened unto Medicare supplement open enrollment.
Clear that up.
Yes, sir.
You had a statement that the employee will not pay more than 9.5% of an employee-based plan. Is that for the individual as well? Will the individual have that same cap on their plan if they're paying out of pocket for their own plan and they're not part of a corporation?
No, there's no. That's to define what is an affordable side of a plan that meets the ACA rules. It has to be the 9.5% number has to be nothing more than that, with regard to the amount that any employee pays for their portion of the self-only premium.
But an individual sole proprietor can pay 50% of their income.
Yeah. Yes, ma'am.
What about those of us on Medicare?
The only thing that I understand that you're going to be dealing with is there's going to be funds withdrawn from Medicare funds. If you're under the Advantage plans, there's funds are being taken from Advantage plans over the future. But as it stands today and throughout the rest of the year, my understanding, there's no changes for you at all.
But I'm not really concerned about now into December. I'm concerned about next year. I mean, I've already been sent information that my Medicare Advantage plan will still have no charge on it. But he's not on an Advantage plan. So, I mean, what happens after January 1st? I mean, you're saying that, you know that this is going to go up 50% and so forth. What about Medicare?
From what I understand, with regard to 2014, there's going to be nothing different for you. Nothing. It's the same plans, same premium, which is zero because of the Advantage plan. Advantage plans are a type of Medicare supplement that came in during the Bush years that costs nothing, and most of the time, often. Not always, but often. In your situation, apparently it's zero premium, right? Did I answer your question?
Yeah.
I think that's kind of good news, right?
No. Nothing about Obamacare is good news. I have another question too. What is the federal poverty level?
I have this Affordable Care Act guide. If anybody wants this emailed to them, give me your email. I'll get it to you. There's all kinds of different ones. Insurance companies have them. This is my favorite one. But if you want it, I'll email it to you. I'll just read it for an individual. Individual, 11,000. This is for 2013. 11,490. That's 100% of federal poverty level. A two-person family is 15,510. And what is surprising, I'll just get to the high figure. A family of 8, 400% poverty level is 158,520. That's this little chart here. You see. Very exciting reading. Yes, Marilyn. Yes, ma'am.
Excuse me. Gene, when you were talking about the United Advantage plans, now is that a supplement plan or is that a primary plan?
supplement, but I have since been told that I don't have a supplement.
Yeah,
And,
because,
and when they cease to offer that advantage plan, and I have to go on Medicare, which apparently I'm not kind of really on, then I'm going to be penalized because I didn't have it all these years.
well, see, we are a Medicare provider, and we have to take, my doctor is a cardiologist, and when someone comes in with a Medicare Advantage plan, even if we are not contracted with that plan, we have to still take that plan because it is a part of Medicare and we are contracted with Medicare. What has happened is a lot of the Medicare Advantage plans have come in, and now people have those instead of Medicare, and they are dissolving a lot of the Medicare Advantage plans. So a lot of the physicians in our area have already been told they are going to be dropped. And if you have a Medicare Advantage plan and your physician takes your plan, you need to check, because we are appealing it, because my doctor will be on call, and what is he supposed to do with patients who have that type of coverage who's in the emergency room, and they will not pay him? So do we have to transfer that patient out? We're trying to find out what the legal recourse on all this stuff is. And people need to be aware, if now is open season for Medicare, if you have a Medicare Advantage plan, you really need to look into maybe going back on Medicare. Even though money is being taken out of Medicare, a lot of the Medicare Advantage plans are being dropped, and they will only have 1 or 2 doctors working for the same amount of people who are covered. They have assured us they are going to send letters to all the people that have these plans to let them know if their doctor is in that plan and that network and he is being dropped. But we have no way of knowing. We do not know. So you guys need to look into it if you have a Medicare Advantage plan. It's very scary.
One thing about the subsidy you may find interesting is that if your employer has qualified group health insurance, whether you're on it or not, you go to the exchange, you won't be eligible for the subsidy. If your spouse has, as an employer, where they have qualified group insurance, and whether you're elected on it or not, you won't be eligible for the subsidy. That's just one of the quirky little rules of it, which is neither here nor there with most people, unless you're in that category. Are there any more questions?
What happens if you're under the federal poverty level?
Medicaid.
I was listening to Rush today, and some lady called up that was a student. She said she made $5,000 a year. Now, she wasn't in Florida. I think she was in Maryland. And she said her Medicaid was going to cost her $400 and something a month. And she only made $5,000 a year. So I was just curious if you had seen anything like that. Yeah, it was 99% of her income.
Yes, sir.
I have a question for those of us who are in the transition, because I turn 65 next March. My wife threatens to retire in the next year when she turns 65. We're on, the Mother Superior is on the plan that mail handlers out in base. What do we do? Stay with mail handlers?
That's my partner, Bob. He knows more about this subject. He forgot more about this subject than everybody else knows. So.
I still sign up for Medicare, right?
Yes. In his case, he would go ahead and sign up for Medicare. In his Part A and Part B, he would stay with the civil service program, because they got several programs to choose from, and they're all still the same as I understand it, so you get the cheapest. It's got your doctor as a provider on it. That's the latest I heard yesterday on television.
Then because your wife is the primary insurance under her plan, your Medicare would be secondary. So it would have to be Medicare secondary. No,
Yes, sir.
I'd just like to know, your company, Florida Blue, do you honestly expect to be able to make a profit considering you're now going to have to cover pre-existing conditions and catastrophic conditions? Probably for about 100,000 people in Oklahoma County, since you're going to be a monopoly provider.
Well,
They will make profit under those conditions?
apparently they tell me so, because I've heard this twice, but there is a rule in the ACA rules, from what I understand, that if Florida Blue picks up enough people with under a certain income level, insurance companies are going to have to pay them. Other insurance companies that compete in Florida are going to have to pay them X amount of dollars because they have brought in other lower paid, lower income individuals. Yeah, I'll say it again. Okay, that's what I said. Listen, that's what I was told. That's what I was told. Now, this is not. I'm going to check in this some more, but I do understand that is the case. Now, what's going on here? The insurance companies. There's in Escambia County and Santa Rosa County. There's three companies. There's Aetna's in there, I believe, and Humana, and Florida Blue. Then when you go from Okaloosa to Leon County, it's all Florida Blue. And that's the choice of the insurance companies. They chose not to be in these counties. Florida Blue is going to be, I believe they're in all counties in Florida. They're the predominant carrier anyhow, Florida Blue is. But when you get into Leon, then you get some HMOs, the capital plans over there. And then as you go down to Florida, it structures out a little different. But the predominant carrier in the whole state is Florida Blue. But it was not Florida Blue, from what I can tell, manhandling this. The insurance companies, the other Aetna and Humana and United, chose not to participate.
Repeat again the part about how they're going to recompense you for getting voted.
I understand there'll be some requirement of the other companies to give funds of some nature to the companies that pony up and insure those higher number of lower income individuals.
So where do they get that money?
I do not know.
I mean, it can't come out of thin air.
Yeah.
They're going to pour money, you're going to get in some.
Yes, sir. Yes, sir.
Obviously thought through, and that's how you were able to answer my earlier question. I can keep my existing insurance, but my risk pool is going to age, it's going to get smaller, it's going to get sicker, my premiums are going to go up, basically.
Your premiums. Go ahead.
My old plan, my premiums are going to go up. Now, for people in Obamacare, has anybody thought through what happens if people that behave in an economically rational manner? Okay, let's suppose everybody who's extremely sick can't get insurance now. They all buy insurance. People who have a very low income, who are going to get heavily subsidized, they all go buy insurance. The young, healthy people who aren't going to use the system, they don't go buy insurance. Are the Obamacare premiums this year going to be reflective of what's going to happen next year, or do people in your industry anticipate changes based on how people purchase in the first year?
The latter, what you just said. The latter, yeah.
The Obamacare premiums, if young people don't sign up and sick people sign up and heavily subsidized people sign up, the Obamacare premiums are probably going up too.
I can't see how they won't.
Okay. So the first year, you can't really read anything into those premiums.
Well, like we said, I gave you the 22-year-old. The 22-year-old. We're talking about we'll call it $150 premium before pre-ACA days, and then ACA days beginning January 1. Another $100 strapped on top of that. That's about 75% increase. Sounds.
It's pretty reasonable that these premiums are probably going up.
Yes. Yeah. With absolute mathematical certitude, they're going up.
In the end, math wins.
Yeah, every time. Yeah. Hey, Brenda.
I have a question. This Obamacare, we've heard that a lot of these subsidized plans, they're trying to stash them into Medicaid plans here in the state of Florida. Is that what they're going to be, a Medicaid plan, this Obamacare?
I've heard nothing like that. I know the federal government is trying to expand Medicaid. They would have preferred that Florida take the limit up to 138%. We decided no, we're going to keep it at 100%. That's all I've heard. I know that they would like to expand Medicaid, but didn't get it. Yes, sir.
Can you speak to how Florida is affected by the exchanges, what decisions they have to make, and what dates they have to make them, what the results of those decisions are? Or is it a done deal with Florida and exchanges?
My understanding, it's a done deal. But the only thing that's messed up here, those that deal with software and computers and all those things in the government weren't as good as Apple or anybody like that. I suppose Apple would have had it on time, but the government guys didn't get it on time. So that's what they're missing in time-wise. And they're planning on being here indefinitely. And the federal government's the one that's subsidizing or running it because Florida opted out of it. So did I answer your question? Come again if you want more. Okay. Yes.
You had said earlier that it's broken up by Florida by county. So other insurers that have opted out of a specific county will not be those exchanges. Individuals will not be able to choose a provider. They'll only be able to be insured by the provider that chose a specific county.
If you're going to that, if you're talking exchange, well, you can get the insurance companies outside the exchange or in the exchange.
As long as it's a qualified plan.
There'll be qualified plan.
There'll be qualified plans outside the exchange.
Yes.
That may or may not be subsidized.
They won't be subsidized. There are no subsidies outside the exchange. You're taking the full brunt. Yes, sir.
Along the lines of my last question, have people in your industry given any thought to how much those premiums might rise next year? In other words, the average premium in Florida this year is going to be $310. Have people run models as to what they, on some fairly reasonable assumptions, what they think that'll translate into?
Yeah, I've seen when we go to the meetings. We go to the meetings where all the insurance company actuaries are there, the president's there, and they throw the charts up. And minimum 25% to 50% is the numbers I'm hearing.
An increase between year one and year two of Obamacare premiums.
I do believe so. Well, you take my example of my 22-year-old male on Tuesday the 1st. At 8 o'clock, we got the rates up because that was the first day we could pull the rates up. And I'm just going by the numbers here. Average rate for that 22-year-old male, $250. Pre-ACA, $150. Whatever percentage 100 is of $150, that's a pretty good number. I might be off a little bit, but no more. I'm no more than 20 basis points off on that thing. Yes, ma'am.
Did I understand you correctly that Florida opted out of the exchanges?
No, they opted out of increasing the Medicaid requirements to 130, from 100% to 138%. The ACA wanted them to do this, but the Supreme Court decided that no, you cannot force them to take the Medicaid limits up to 138% of poverty level. So they kept it at 100. But states like Massachusetts and New Jersey and New York, if you look at theirs, I believe you'll find their exchanges will start at 138%, but we started at 100%. That make sense? Okay. Yes, sir.
As a couple other gentlemen pointed out, you're limited to providers in your county, regardless of whether you go seek the insurance outside of the exchange or within the exchange, correct? So I live in Okaloosa County. If I were I have TRICARE, but if I was gonna go use the exchange online, I would still have to go through Florida Blue, or if I go.
If you're going to exchange, yeah.
And it behooves me to go through the exchange because then I have the potential of getting the tax subsidy.
Well, if the subsidy is not there, I know of no reason to go through the exchange other than the subsidy. Maybe there is one. I haven't known yet because that darn thing hasn't shown up yet. We're still pushing the buttons, but all we can see is basic. Ain't their screen.
So the competition statewide.
I'm sorry?
The competition for insurance before Obamacare, it used to be like statewide, right? I could go get insured by whoever within the state of Florida.
And you still can. You no, I guess you can. That's correct. You have to go through the exchange. You cannot get Aetna or Humana through the exchange. You've got to get Florida Blue through the exchange.
But, I mean, on one hand, you have people talking about opening up the gates and allowing insurance companies to compete across state lines. Okay, but then under Obamacare, apparently, to be compliant with Obamacare and with the exchange, now it's not even the statewide competition.
Yeah.
It's countywide competition.
And that's as it has been for a long time. With regard to the networks of doctors with the insurance, with Florida Blue, for instance, that has not changed. There are three main networks that you've got. The Blue Options, which is the largest. I believe the school system was the second largest. Correct me if I'm wrong, Mr. Lamar. The second largest employer in the county is the school system, and they have Blue Options for their care, for their network. Now you can choose the HMO option, which is a smaller, constrained group of doctors, or you can choose the Select group, which is even more constrained, which is the Sacred Heart doctors and hospitals. And that's some of the things the insurance companies are doing to get the premium down, to constrain your network. If you want the Blue Options and get the biggest one, you can get that, pay more money. HMO, a little less money, Select, even less. That make sense? I hope so. Yes, sir.
I want to be facetious. I see your business crashing. Have you thought about opening up a funeral home?
It looks like we got a lot of business for the next couple of years, and then we'll see what happens. We'll see what happens. Yes, sir.
Seems to me I heard Reed say that this Obamacare is all going to go to a single payer anyway. Is all of this stuff going on now just to keep our mind off of the direction it's going to go?
Makes sense to me. Makes sense to me. Yes, sir.
Is Medicare considered insurance, or are you going to get fined?
It's considered insurance. That's a good question. That about it?
I have one more question.
Yes, ma'am.
Do you have to have Medicare A and B for it to be considered insurance?
Bob, you get that question?
A and B for it to be considered qualified.
Oh, to be qualified? Yes. Have A and B to be considered qualified, yes.
A alone won't do it.
A alone won't do it.
Okay. I'm gonna get a little political here just and just say something. I think the saddest thing about this stuff is that we have culture now. We have so much the allocation of our economic resources are in the hands of the political class, and it has never been a very efficient way to allocate resources to let politicians and bureaucrats allocate resources. And this is what this is. We are off the chart when it comes to politicians and bureaucrats and the allocation of resources. This is off the chart, and I wish it wouldn't happen, but it is, and we got to deal with it. I appreciate you guys. Yes, sir.
Where's your email sign up list?
Just come write it down here.
There's a lawsuit in federal court going on right now to enforce the provisions of the Affordable Health Care Act and not delay the penalties. Are you tracking that?
No, I don't track it. We just look at it and listen to it like you do and hope for the best. Thank you. Thanks, everybody.